While questions are coming, can I just say,
Yeah.
we've seen a rise in premium for renewable energy assets as well, funnily enough.
Yeah.
And that's probably, we don't know why, but I would argue it's probably related to extreme weather events affecting assets.
So some of
it
the
does
work,
affect
some of the work we've done, we've actually asked ourselves, we buy a lot of energy from IPPs, and the question we've been asked internally, these IPPs have said they're going to deliver this much. Can they deliver this much? And at what times of the day? A simple question. If we are buying so much from wind IPPs, can they deliver on this time? Can they deliver by this year? And how much of that energy can we expect from that? And the results of that work have been very interesting. For example, most of the energy we're getting from the IPPs, it's at 2 a.m. in the morning. You know, and those are some of the results that we are getting. And it tells you the shift in weather and the intensity of that wind. You know, there's a whole lot of other information that we are finding out from the renewable also. So we are doing some of that work also. Yeah.
But from the wind ones, not the solar ones.
Yes, also from the the solar ones also we're getting very interesting because it also about the intensity and the solar radiation also. Should we be shifting from the Northern Cape and be looking for more from the Western Cape of the country? So those are some of the outputs that we're getting from and if we were to invest as a company in renewables, where should we be putting money, in the Northern Cape or should we be moving to the Eastern Cape? So those are some of the questions we are already asking ourselves internally, purely from a climate change perspective. It's not an investment or financial, you know, it's purely from a climate change perspective, and it's interesting results we're getting from that. Yeah.
Very interesting. Any questions from the floor? Sir?
Okay. Now, thank you very much for very insightful conversation. I think one of the key issues, and this is a general question, not specific to any panelist, one of the key issues that we hear around the participation or lack of participation of private sector in adaptation projects is the whole issue of bankability of projects. And I wanted to get an understanding from colleagues in the room to see whether that is a real issue vis-a-vis the risks that even the private sector is facing, and how can we collaboratively start addressing that perspective or that narrative or that constraint to, you know, collaborate and build projects that would then advance resilience under these current scenarios that we have all spoken about.
Good. Well, it's a big question, so let's answer it. Any views?
Yeah, I can continue.
Go for it.
It's something I'm thinking about all the time recently. So I don't have an answer, but I have a comment. My observation is that there is no finance for climate change adaptation for infrastructure. That's just my observation. There is finance. There's finance for infrastructure. There's no finance to build climate resilient infrastructure, in my observation, and in my discussion.
So that's the difference between planning that infrastructure for what we think is going to happen, for what we project to happen.
Yeah. So how I'm thinking about it is if I'm building a new piece of infrastructure for Transnet, and if the threshold level historically was X, and given a projection of RCP 8.5, it's now X plus 50%, I'm not going to get any kind of preference financing for that plus component. So to me, it's just financing. So I guess my observation is that when it comes to infrastructure in particular, and I must stress, just for infrastructure, I haven't, and this is through my engagement with development finance institutions in general. There's no product that I've seen that could fill that gap. I'm still looking, and I'm hoping that something comes up, but I haven't seen anything. Yeah.
With us, it's slightly different. Our funders are asking us, how climate-proof is this infrastructure? Is if you are planning to build a gas power plant in Richards Bay? Have you looked at climate impacts? What is it that you're doing? And this has always been, I mean, when Medupi, from what I hear, I was not there, they were asked how much of the climate change impacts have you considered? Are you going dry cooling, you know, all of that. So even our current funders who are refinancing us are constantly asking us, how are you climate proofing? What is it that you're putting in place to ensure that the infrastructure, if you're building a new distribution network in the Eastern Cape, the Vuyani line, I mean, how climate proof is it? Have you looked at it from, your high fire danger days? What systems do you have in place that are going to ensure that our investment is not wiped out in the 5-10 years? So for us, it's been different. Anything that we're raising finance for, we're being asked that question all the time. Yeah.
You want to quickly respond?
Yeah, just to look. I think we're saying the same thing. It's when they're coming through for the due diligence after giving you the money, they want to know these things, right? And I mean that's just part of due diligence. But what I'm saying is that I'm not getting any kind of special finance.
Oh, special finance.
Right. So at special terms because I'm adapting my infrastructure.
Yeah.
I have to do it at market rates.
Yeah, I agree.
So to me, that's not climate finance. That's finance.
Yeah. and I get, we get asked a lot. So if you're saying these are the climate change impacts, have you put a rand value on it? And if you've put a rand value on it, how much it is? How did you get to that? Yeah. So we agree on that.
So we on the same page.
Yes, yeah.
I'm not a debt expert, and it's a pity that Saki's not still here, but I mean, I'm hoping with the rising green bonds and with a bit better private sector understanding, we may start seeing that if you have exactly the same lender lending to a new Transnet project along the coast, if that project can demonstrate that it's got a proper sea defense system and it's done properly, it may get cheaper cost of finance, a cheaper debt than if it can't demonstrate that properly. So we may start seeing some sort of incentives in the lending market. But I'm not in that market, so I don't know. But I would imagine that what has been said is correct. That is not there yet.
But I guess the alternative is that if you're going to build infrastructure that's not climate resilient, your cost of capital should be much higher, right?
Well, it's the converse, exactly. And then on the more specific bankability question, I mean, I agree. You know, there are some that are public good things, and I think the worry is that people kind of mix up these different categories of like a financeable or bankable project. So a sea defense, a new stormwater management system for a municipality, those are not bankable in the sense that they've got no revenue stream. So it's not that they're not good projects or sometimes they just don't have a revenue stream that can attract a lender, or, you know, the lender will only lend to them on the basis of the balance sheet of whoever the entity is that's delivering them, the municipality or Transnet or Eskom. And then there are the others, or on the other extreme, they're the projects that I think are fully bankable. So we're investing in companies that are putting money in to reduce their water use because they see there's an actual saving from that and they're going to make money, or same with agriculture. Or you could invest in an irrigation scheme and you could repair that irrigation scheme, and the Water User Association will pay. You can enter into an agreement with them over the next 10 years. They'll pay you for that capital because they're going to lose this water and they'll have cheaper water from the irrigation scheme because you're avoiding losses. So there's that end, that's a bankable. And then I think there's some project in the middle, and that's where I'd like to be great to see Environment Affairs starting to sort of think creatively, or municipalities and so forth, where, for example, a stormwater management system may cost X to implement by a municipality. The other option for doing a stormwater management system might be you tell individuals or developers and so forth to put stormwater drainage systems on site, you know, different approaches. And if you can do that more cheaply than you can by building a stormwater management system, and you can kind of find a way to pay those people to do that, or, you know, in a way, so you can then create kind of bankable projects by regulation, and that's been done elsewhere in the world. So there are examples where you can create bankability by sort of creating systems of trade-offs, and I think we're going to see the whole, you know, range of projects, and some are going to just have to be done. Transnet might have to raise their port walls. No one's going to pay them for that. It's a cost of doing business that they're just going to have to do. but then there will be the other side of projects where there's some money to be made, as it were, in the adaptation space. Yeah.
Yeah, I mean, this came up a little bit in the last session, in the finance session. How we design projects, both from the government and the private sector side, to create cash flows, to create, therefore, bankability, is kind of what we're trying to do here. And there are lots of ways we can think differently about that. So it can be a government subsidy, it can be built into how we price the products, it can be built into guarantees provided by offtake agreements. There's a bunch of different ways that we can think about this. And I guess it's the collective imagination and innovation capacity in this partnership that we are after. So I'm conscious that we are over time, and I'm really grateful that you all hung around to hear this conversation, because it was really useful. I mean, we could go on for several hours. We are planning another adaptation company-driven session, which we'll all be invited to at some point. So please do watch out for that. And I mean, a quick summary from some of the takeaways, and I also recommend that you read a report that we put together a couple of years ago called A New Climate of Risk, which deals with a lot of these company experiences, and Eskom and Transnet were both part of that, but a number of our other member companies as well, all following a similar kind of journey. This, how do you get going without the data? How do you take those first steps? How do you do the convincing? I always remember a paper that Sherman got hold of that was written by Goldman Sachs that looked at trading risk in coal. And he could put something in front of his board and his strategy people that didn't come from the NBI or didn't come from the WWF. It came from Goldman Sachs. Like, pay attention to this, guys. So there's lots of little tricks and tips in there, but also a lot of discussion about some of the risk. I think there's a huge opportunity for us to collaborate on data. So it's clear that data and information is a challenge, but there are lots of us that are doing different things, running our own hydrological models to assess a particular risk. If we can find a way to pool that data and pool how we're thinking about these things as we start to design the bigger projects, I think that there's a lot more information and data than we think we have, but it's hidden away and it's bespoke. So I think we should think about that. And then the last key point I wanted to make is everybody talks basically fundamentally about integration. How do we integrate in risk? How do we integrate in strategy? And to use the data systems that exist in those business functions as a means to start understanding our risk and our potential actions. So thank you to the panel. Thank you to the speakers. We really appreciate you taking the time out today for another really interesting and rich discussion. Please look out for the fourth event. We look forward to seeing you all again, and look out for the videos that we can use to help spread the word. Use those videos internally. There'll be the short clips that you can use to get people's interest, and then try to push them towards the bigger discussions. Because ultimately, if we're going to build these mega projects that we are ambitiously excited about, we need everybody working together and collaborating. Those videos will be available. We're going to start putting them out in the next week. So we've kind of got them queued up. The small ones will come out, and then we'll have the bigger ones on the website as they get ready. It takes us about 2 weeks to edit them and then make them available. So this one will come out 2-3 weeks' time. The other ones will start to release now.
Steve, we forgot to mention the governance mechanism. By the way, anything that we have to do, it has to be approved at the highest level possible. And there's teams who work on that, and
so you're saying someone has to watch these videos and sign them off. Okay, that's fine. So
and that's where things
4
like
to
the
5
TCFD
weeks for the release of this one.
Done.
Very good. Thank you, everybody. Please stay. There will be some lunch. We want to create networks, as you know. So please stay and chat to people. And thanks for coming.